All right, let's get into this stack of research on natural hazard insurance and climate change. It's a pretty fascinating mix you've gathered here. Academic papers, some industry reports, even some government policy documents. So our mission today is basically to unpack how climate change is shaking things up in the insurance world and what that means for all of us, day-to-day life.
Yeah, and what I think is so interesting here is we're not just talking about numbers and policies, right? This research actually reveals this really crucial role that insurance plays in building a resilient future. I mean, ultimately, it's about safeguarding communities and economies against climate change.
Okay, so let's set the stage here.
Hmm.
This meta-analysis you've included, it's a deep dive into all the other deep dives, right? Synthesizing tons of studies, gives us the big picture. What's the scientific significance?
Yeah, this kind of comprehensive review is incredibly valuable because it allows us to see those big trends and those gaps in our knowledge, areas where we need to focus future research.
So for our listener, that means we're not cherry-picking individual studies. We're looking at a whole body of evidence to bring you the best insights. Now let's get into it. How is climate change impacting natural hazard insurance?
Well, the research paints a pretty clear picture. A warming planet means we're going to see more frequent and more intense extreme weather events, hurricanes, floods, wildfires, you name it. And they're becoming more common and much more costly. And that's putting immense pressure on the insurance industry.
Yeah, it's like they're on the front lines of climate change, dealing with the financial fallout firsthand. And we all remember Hurricane Katrina back in 2005. Over $135 billion in damages. A huge wake-up call, right?
Oh, absolutely. I mean, events like Katrina really highlight the enormous financial stakes involved and the crucial role insurance plays in helping individuals and communities recover from these disasters.
So it's not just about paying out claims after a disaster. It's about anticipating these risks and adapting to a new reality where the old rules may not apply anymore.
Precisely. And the research shows that forward-thinking insurers are recognizing the increasing importance of natural hazard insurance as a tool to mitigate climate change risk. It's a shift from reactive to proactive, from simply responding to disasters to actively working to prevent them.
That's what I think is so interesting here. We often hear about the challenges climate change poses, but this research highlights how the insurance industry can actually be a force for positive change.
Yeah, I think insurers are in a very unique position. They have a vested interest in understanding and managing climate risk, and they have the financial leverage to influence behavior and really incentivize that adaptation.
They're not just number crunchers anymore. They're becoming key players in building a more resilient future. But this isn't a solo mission, right? The research also emphasizes the growing importance of collaboration between insurers and governments.
Collaboration is key. Governments set the stage by establishing regulations, building codes, land use policies. All of these things can encourage or discourage development in high-risk areas. They can also provide incentives for insurers to offer affordable coverage in those areas or create public insurance programs as a safety net.
So it's a partnership where governments are setting the framework and insurers are providing the tools to manage those remaining risks. But what about the challenges insurers are facing? The research doesn't shy away from those either.
Well, of course not. Climate change throws a wrench into a lot of our traditional risk assessment methods. The past is no longer a reliable predictor of the future. So insurers are grappling with how to model these unprecedented events, how to quantify uncertainty, and how to price risk when the goalposts are constantly shifting.
Trying to navigate uncharted territory without a map. You mentioned catastrophe models earlier. Can you explain those a bit more for our listeners and why they're being challenged by climate change?
Sure. Catastrophe models are basically sophisticated computer programs that simulate the impact of natural disasters. They use historical data, scientific projections, and complex algorithms to estimate potential losses. But climate change is making those historical patterns less reliable. We're seeing events that are outside the range of past experience, and it makes it very difficult to predict the future impacts.
So insurers need new tools and approaches to navigate this uncertain terrain. And that brings us to, I think, a very interesting part. How are they adapting? What strategies are they developing to tackle these challenges head on?
This is where the research gets really insightful. It highlights how insurers are innovating on multiple fronts, from data collection and analysis to risk modeling and product development.
Okay, let's unpack that. Starting with data collection. What are insurers doing differently now to get a better handle on these climate risks?
Well, they're going beyond those traditional sources like historical weather records and claims data. They're using cutting-edge technologies like satellite imagery, remote sensing, even AI, to gather more information on everything from sea level rise to wildfire risk.
It's really amazing how technology is changing how we understand and manage risk. It's like having a whole new set of eyes on the planet.
Yeah.
But it's not just about collecting the data, it's about analyzing it effectively, too.
Exactly. Insurers are investing a lot in data analytics and machine learning to identify patterns, vulnerabilities, and to make better predictions about future risks.
So they're using data to get ahead of the curve.
Precisely. And this approach is transforming catastrophe modeling as well. Remember those sophisticated computer programs we talked about earlier? Well, insurers are refining them, incorporating climate change projections and the latest scientific data to better capture that evolving nature of risk.
So they're essentially building a more dynamic and responsive system, one that can keep up with those rapid changes that we're seeing. It sounds like a monumental task.
It is a big one. But the research shows that the industry is making progress. They're realizing that those traditional approaches just aren't enough anymore, and they're embracing this innovation to stay ahead of the curve.
And this is where it gets really interesting for me, because it's not just about mitigating risk anymore. It's about turning that risk into opportunity. Some insurers are actually developing entirely new products and services to support that transition to a low-carbon economy.
That's right. Insurers are beginning to see climate change not just as a threat, but as a potential driver of innovation and growth. So they're developing products that actually incentivize sustainable practices, offering discounts for homes with solar panels or electric vehicles, things like that.
It's like they're using their financial power to kind of nudge us all in a more sustainable direction.
Yeah.
What about those public-private partnerships we mentioned before? How are those playing out in the real world?
We're seeing some very interesting collaborations. Some governments are working with insurers to develop risk-sharing mechanisms, so the government would provide a backstop for those really catastrophic losses that exceed a certain threshold.
So it's about spreading the risk, making sure that insurance remains affordable and accessible, even when we face these increasingly costly disasters.
Exactly. And we're also seeing partnerships that are focused on community resilience. Insurers are working with local governments and nonprofits to develop strategies for actually reducing risk, improving disaster preparedness.
Now, for our listeners out there, you might be thinking about the cost of all of this. Is climate change driving up those insurance premiums?
It's a tough question. In some high-risk areas, we are seeing those premiums rise as insurers kind of adjust to that changing landscape. But it's not a simple across-the-board increase.
So it's not just insurers kind of cashing in on climate change.
Not at all. Many insurers are committed to keeping insurance affordable because they know that access to insurance is crucial for people, for businesses, for communities to thrive.
But how do they balance that affordability with the need to accurately reflect these growing risks?
That's where the idea of risk-based pricing comes in. It's about setting premiums that actually reflect the level of risk that's associated with a property or a location.
So if you're a homeowner in a flood-prone area, you might pay a higher premium than someone on higher ground. It makes sense when you think about risk assessment, but I imagine it can be pretty controversial.
It definitely can be. Risk-based pricing has its critics. Some argue that it unfairly penalizes people who live in those high-risk areas, even if they can't afford to move. And there are concerns that it could lead to climate gentrification, where only the wealthy can afford to live in the safe areas.
That's a really serious ethical issue. So how can we ensure that risk-based pricing doesn't put a burden on those vulnerable communities?
Well, that's where those public-private partnerships are really crucial. Governments can play a big role in mitigating those negative impacts, maybe by offering subsidies or assistance to low-income households in those areas, or even invest in infrastructure improvements to reduce that risk overall.
It's about finding that balance right, protecting both people and property, making sure everyone has access to insurance, but also incentivizing that responsible behavior.
Exactly. It's complicated. But the research does show that there are some innovative approaches being explored. Like some insurers are experimenting with what's called pay-as-you-drive insurance, where your premiums are actually based on how much you drive.
Oh, so someone who drives less and produces fewer emissions, they pay a lower premium. It's a win-win, encouraging climate-friendly behavior and affordable insurance at the same time.
Right. And we're also seeing a rise in what's called microinsurance. This is basically providing small-scale, affordable insurance products to low-income communities, especially in those developing countries.
It's about bringing the benefits of insurance to those who need it most, those who might not have access to those traditional products. What kinds of things does microinsurance cover?
It can cover all sorts of risks, from crop failure due to drought to damage to homes from floods or earthquakes, really tailored to the specific needs of those communities.
It sounds like a really powerful tool for those vulnerable communities.
It really can be. By giving them a financial safety net, microinsurance can help people recover from disasters and hopefully avoid falling into deeper poverty. It's an area where the insurance industry can make a real positive impact.
Let's shift gears a little bit and talk about governments. We've talked about this a bit throughout the conversation, but the research really highlights the importance of government action in shaping the insurance landscape.
Absolutely. Governments have a lot of tools to influence how insurers respond to climate change. For example, they can set building codes and land use regulations that discourage development in those high-risk areas. They can also provide incentives for insurers to offer affordable coverage in those areas or create public insurance programs as a safety net.
So it's about creating an environment that encourages responsible behavior and protects those who are most vulnerable.
Exactly. And governments can also play a big role in supporting research and development of new technologies and approaches for managing climate risk. They can support things like data collection, the development of new insurance products, and training people in this field.
So it really highlights how interconnected all these different players are. Insurers, governments, researchers, communities, all working together for a more resilient future.
Couldn't agree more. It's important to remember we're all in this together. The choices we make today will determine how well we can adapt to the challenges of climate change.
So for our listeners out there, what are your big takeaways from this conversation so far? What aspects of this research stand out to you the most?
I think for me, what's really striking is the scale of the challenge, but also all this incredible innovation happening within the insurance industry. It's like they're going through a transformation.
Yeah.
From just paying out claims to being these proactive architects of resilience. And this meta-analysis that we've been talking about, it really shows how important this research is in guiding that change.
Yeah, and you've touched on something really important there. This isn't just about the industry changing, it's about our knowledge evolving too. What are some of those big questions that researchers are still kind of grappling with? Where do we need more data, more understanding?
One area that stands out is the long-term impacts of climate change on certain types of risk. We're getting better at, projecting sea level rise or changes in rainfall, but understanding how those translate into actual losses for specific communities, infrastructure, even types of buildings, that's where we need more research.
So we know the storm is coming, but we need to figure out which houses are going to get blown down right
Yeah.
to make those risk assessments more accurate.
Right, exactly. And that impacts everything from setting those insurance premiums to helping communities plan for adaptation. Another big question is really how effective are these different adaptation strategies? We've talked about things like risk-based pricing, microinsurance, public-private partnerships, but we need more real-world data. What works best in different situations?
So moving beyond the theory and actually seeing, did this program reduce losses? Did it help people recover faster?
Exactly. Making sure that we're investing in solutions that really make a difference. And of course, there's always the need for better data. We've talked about the advances in data collection, but there are still gaps, especially when it comes to understanding how vulnerable our buildings and infrastructure are to different hazards.
Yeah, so even if we have great climate projections, if we don't know how strong a bridge is or how well a roof can handle high winds, that's going to affect how accurate our risk assessments are.
For sure, absolutely. And that's why collaboration is so important. Insurers, researchers, governments, even homeowners, all working together to collect data, share information, and develop effective solutions.
This has been a really fascinating deep dive. We've seen how climate change is really reshaping the insurance landscape, but also how the industry is stepping up, innovating, adapting, and playing a role in building that resilient future. Any final thoughts for our listeners as we wrap up here?
I think if there's one thing to remember from this, it's that natural hazard insurance isn't just about protecting your stuff anymore. It's about protecting lives and livelihoods. It's about understanding risk, being open to new ideas, and really working together to build a world that can withstand the storms that are coming.
Well said. And on that note, we'll leave you with a final thought. If insurance premiums really reflected the true cost of climate risk, how would that change our choices, our business decisions, even government policies? Could it be the push we need towards a more sustainable future? Something to think about, and thank you for joining us on this deep dive.